Thanks for taking a few moments to learn about conventional financing and the types of financing that might be available. If you've gone through the site at all, you've probably seen pages for SBA, both 7A and 504 loans. You might have seen for private money financing. When it comes to conventional financing, there really are a broad array of possible financing options that are there. First of all, it's not like with a 7A, say a SBA 7A loan. We know that the most that they can charge is be prime plus 2 3/4. We know that it'll be a 25-year amortization for real estate. It'll be 10 years for equipment, fully amortized. It's not that way on conventional financing because it depends on the bank or the lender that we send it to. In general, most of the commercial loans that we're doing right now are 10-year notes, and some of them are 5-year fixed rate, some of them are 10-year fixed rate, some of them are variable. We obviously try and get a fixed rate because that's going to be more desirable than a variable rate unless the variable rate is really, really, really low. So most of these are going to be amortized 20, 25 years depending upon how new the property is. And the thing is at the end of the 10 years, the note's going to be due. So when that note, when you're at the end of the 10 years, it balloons and you have to refinance it out. That's attractive to some people, it's not attractive to others. The advantage of conventional, it's typically a little bit cheaper, meaning in terms of origination and maybe even rate, to get a conventional loan compared to an SBA. And the reason why is normally banks are only going to charge a point, maybe a little more, but sometimes you get it for less. And the rates are typically, especially if you're using a small local bank will give you probably the best rate because they're going to get a depository account from you also, and they might get a charge account with you, so that's why they'll give you that low rate. The flip side to that is if you're using a local bank and if you're doing conventional financing, about the maximum that you're going to see is about a 75% advance or loan to value, and that's against real estate and equipment and land, not goodwill. And so that would make it more difficult to get the transaction done. So, and the other thing about it is that makes it a little bit more hard to qualify for in the sense that if you're doing conventional financing, you're normally not going to be able to roll in closing costs, you're normally not going to be able to roll in working capital and or inventory. And so there are advantages and disadvantages of conventional versus some sort of government-backed lending. And again, in terms of quoting rate, it's very difficult in this type of venue to quote a rate because sometimes they're based on prime, sometimes they're based on LIBOR, sometimes they're based on treasuries. Again, it really depends on who the lender is and what their particular index that they use. So again, take a moment to look at some of the options that we have. Please give us a call or shoot us an email or use our online application so that you can find out what your options might be. And thanks again for taking a few moments to review this.